Life, right. It's full of incredible moments, but let's be honest, it can also throw you a curveball you never saw coming.
Mhm.
And when those unexpected challenges hit, especially something like a serious accident, having a safety net isn't just nice to have, it can be absolutely essential.
Ends up protecting the foundation, yeah.
Yeah.
The family's ability to weather a sudden storm.
Exactly. And today we're doing a deep dive into a specific initiative in India that's designed to be precisely that kind of crucial safety net for the common person. We're talking about the Pradhan Mantri Suraksha Bima Yojana.
PMSBY, yeah.
You might know it as PMSBY.
And this exploration, well, it's based on insights from Indian Souls, that platform focused on government schemes and public initiatives.
Right. Our mission is to really unpack what PMSBY is all about, understand its key features, and see what makes it a potentially life-changing protection for millions.
Mm.
And speaking of striking features, the source points out something absolutely, well, mind-blowing about its cost. Get ready for that.
It really redefines accessible security, doesn't it?
Okay, let's unpack this then. So, to start, what exactly is PMSBY at its core?
Well, Indian Souls describes it basically as a personal accident cover.
Okay, accident cover.
Yeah. Its fundamental purpose is to provide financial relief and security to a family if the policyholder is involved in an accident that unfortunately leads to death or severe disability.
So it's not like general health insurance covering illness or life insurance covering death from any cause. It's specifically tied to accidents.
Precisely. It's designed to be that anchor, as the source puts it, specifically for families facing the sudden, often devastating financial consequences of an accident.
Right.
It's part of the government's push for broader Social Security focusing on unexpected physical harm.
An anchor is a great way to put it. Now, you hinted at the cost, and this is where Indian Souls reveal something truly extraordinary. What are we talking about here?
Okay, prepare yourself. The annual cost for this cover is a mere 20 rupees.
20, just 20 rupees for an entire year's protection?
That's what the source states.
Yeah.
20 per year. Indian Souls even makes the point, that this is less than the cost of a single cup of tea or a small snack in many places.
That's incredible.
For that tiny amount, you get this layer of security.
Wow. Just processing that 20 PRs a year. How is something this affordable managed? And how do you even pay such a small amount conveniently?
Well, the affordability is tied to its design. It's a massive scheme, pooling risk across potentially millions of people, right?
Okay, scale.
And its simplicity keeps administrative costs low. And the payment convenience, that's key for accessibility. That small Euro 20 premium is automatically deducted each year from a linked bank or post office account.
Ah, auto debit.
Exactly, through an auto debit facility.
Okay, so the scheme leverages scale and automation to keep costs down and payments simple. That makes sense. It's designed to be hassle-free. You just need to make sure the funds are there.
Exactly. The process is built around ease of access for the masses.
And once you're enrolled and that euro is paid, how long does the coverage actually last?
The coverage runs for a full year. Typically, this cycle is from June 1st to May 31st of the following year.
Okay, June to May. And is this something you have to, actively re-enroll in every year, or does it just continue?
It's designed as an annually renewable scheme.
Right.
So the continuous protection comes from the auto debit succeeding each year.
Mm.
As long as you're still eligible and the 20 is available in your linked account for the deduction before June 1st, the coverage automatically renews for another year.
That continuity is crucial, yeah, for long-term peace of mind. So who is this protective circle open to? Who can actually join PMSBY?
Well, Indian Souls highlights that it's intended to be broadly inclusive. It's available to individual bank account holders in India.
Any bank account holder.
Pretty much, yeah.
Yeah.
The only sort of condition is that their bank or post office needs to be participating in the scheme, which most major ones do.
Right, okay. Is there an age range involved?
Yes, there is an age limit. You need to be between 18 and 70 years old to enroll and stay covered.
18 to 70.
Yep. Anyone within that range with a participating bank account can join. The core requirement really is providing your explicit consent for that annual 20 auto debit.
So 18 to 70, bank account, consent for auto debit, simple and broad eligibility. Now, let's get to the heart of the safety net, the benefits. What does PMSBY actually provide financially if, God forbid, an accident occurs?
Yeah, this is where the scheme's value becomes most apparent, right? Indian Souls outlines different payout levels depending on the severity and outcome of the accident.
Okay, let's start with the most severe outcome, accidental death.
Right. If an accident unfortunately results in the policyholder's death, the designated nominee receives a payout of 2 lakhs.
2 lakh rupees.
Yes. And think about what 2 lakhs could mean for a family that has just lost a primary earner or a loved one unexpectedly due to an accident.
Yeah, absolutely.
It's not, compensation for the loss itself. Nothing can do that. But it can be absolutely vital financial support. It helps navigate immediate expenses, debts, or simply provide a buffer during an incredibly difficult transition period. The source kind of implicitly emphasizes this by framing it as crucial support.
2 lakhs for accidental death for an annual euro premium. That ratio is just, it's hard to grasp the scale of that accessibility, isn't it?
It really is.
What about disability? Does it cover that too?
Yes, the scheme also covers total and irreversible disability caused by an accident with a payout of 2 lakhs as well.
Okay, same amount. And total and irreversible covers specific conditions, right? What does Indian Souls list there?
Yes, the source is specific here. Total and irreversible disability qualifying for the 2 lakhs payout includes the complete loss of sight in both eyes,
Both eyes. Oh,
or the loss of use of both hands or both feet,
right.
or the loss of sight in one eye combined with the loss of use of one hand or one foot.
Got it.
These are, disabilities that severely impact a person's ability to earn a livelihood. So that 2 lakhs payout is significant assistance to help the individual and their family adapt to life-altering changes, covering potential medical needs, home modifications, or income replacement challenges.
That covers the most life-altering physical outcomes from an accident, but is there also coverage for less severe but still permanent disabilities?
Correct. For partial permanent disability resulting from an accident, the payout is 1 lakh.
1 lakh for partial. And what conditions fall under that category?
Indian Souls specifies this as the total and irreversible loss of sight in one eye,
Okay, just one eye this time.
or the loss of use of one hand or one foot.
Right.
So while less severe than the previous category, these are still permanent disabilities that can significantly impact a person's daily life and earning capacity. The Euro lakh payout can help cover related medical expenses, rehabilitation costs, or provide support during the adjustment period, as the source notes.
So 2 lakhs for death or total irreversible disability, and 1 lakh for partial permanent disability, all for that seemingly impossible annual cost of $20. It really does underscore how the scheme is designed to provide meaningful support exactly when it's needed most after an unexpected accident.
It's a very clear benefit structure,
Yeah.
directly addressing the potential financial fallout from accidental harm.
This raises a practical question then. How do you actually get enrolled in PMSBY? Is it some complicated bureaucratic process, or is it as accessible as the premium suggests?
No, Indian Souls indicates the process is quite simple, actually. There are both offline and online pathways designed to reach as many people as possible.
Okay, let's walk through the offline way first. How does that work?
The most common offline method is simply visiting the bank branch where you have your account.
Your own bank branch?
Yeah. You
Yeah.
just inform them you want to enroll in the Pradhan, Mantri, Suraksha, Bima, Yojana. They'll give you a pretty straightforward application form. You fill in your basic details, importantly, nominate your beneficiary for the payout, and then provide your consent for the annual auto debit.
Okay.
Once you submit it, you should receive an acknowledgement slip-cum certificate of insurance, and you should hold on to that as your proof of coverage.
Right, keep that safe. So just a quick visit to your bank seems like the easiest offline route. What about online options? Are there ways to do it from home?
Yes, definitely. Many participating banks have integrated the enrollment process into their net banking portals and mobile apps.
Oh, okay.
You can often find it under sections related to insurance or government schemes. It's designed to be just a few clicks if you're comfortable with online banking.
And if your bank's online system isn't set up for it, or maybe you just prefer getting the form yourself first.
Well, Indian Souls also points to the official Jan Suraksha website. That's jansuraksha.gov.in.
jansuraksha.gov.in.
Exactly. You can actually download the application form directly from there.
Right.
The specific page is jansuraksha.gov.informs PMSBY.aspx. So you could potentially fill that out and then submit it to your bank as well. The key is accessibility through multiple channels,
That's great to know there are options. Now, while it's incredibly affordable and accessible, are there any crucial points or maybe potential pitfalls the source mentions that listeners need to be aware of? Important things to remember about maintaining coverage.
Yes, definitely. Indian Souls highlights a few specific scenarios where the coverage would terminate.
Okay.
First, as we mentioned with eligibility, the coverage automatically stops when the individual reaches 70 years of age.
Right, the upper age limit.
Exactly. Second, the coverage is linked to that specific bank account from which the auto debit occurs. So if that linked bank account is closed for any reason,
Ah, then the insurance stocks, too.
correct, the PMSBY coverage tied to it will also end.
Makes sense. And the third point, and this sounds absolutely critical for continuous coverage.
Yes, this is probably the most common reason coverage might accidentally lapse. The policy terminates if there isn't a sufficient balance that 20 rupees available in the linked account for the annual auto debit to succeed before June 1st each year.
Before June 1st, that's the key date.
Absolutely. You must ensure the funds are there in time for the deduction to take place.
That's a really practical takeaway. Maybe mark your calendar or set a reminder on your phone to check your balance before June 1st each year. So, reaching 70, closing the linked account, or failing the auto debit due to insufficient funds. Those are the key ways coverage ceases.
Exactly. Being mindful of those ensures the safety net stays in place.
So, pulling back and looking at the bigger picture now, why does Indian Souls frame PMSBY as so significant? Why does it truly matter for you and your family, potentially?
Well, the source emphasizes that in a country with such a large population, and let's face it, varying degrees of financial stability, a sudden accident can be financially catastrophic for families.
Especially those with limited savings.
Precisely. PMSBY steps in as a truly accessible barrier against that specific the risk of accident.
So it's not just an insurance product then, it's really a tool for financial resilience against these unexpected physical shocks.
That's a good way to put it. Indian Souls argues that by providing this level of cover for a premium that is virtually negligible for most people, it brings a crucial layer of security within reach of the vast majority. It's a powerful example of how large-scale government initiatives can create widespread access to essential protections that might otherwise be unaffordable or just too complex for many people to navigate. It's about providing dignity and a fighting chance against the arbitrary cruelty of an accident's consequences.
Framing it that way, dignity and resilience, that adds a lot of weight to that simple 20 premium, doesn't it? It really does seem like a foundational piece of security.
It offers immense peace of mind for a minimal annual effort and cost.
Yeah.
A small proactive step for potentially significant protection.
Absolutely worth exploring further, I'd say. Reaching out to your bank, checking their app, or visiting that Suraksha website are all great ways to get the ball rolling.
Agreed. Definitely worth looking into.
This has been a truly eye-opening deep dive into the Pradhan Mantri Suraksha Bima Yojana, thanks to the information provided by Indian Souls. Thank you for guiding us through it all.
My pleasure. It's an important scheme to understand.
And for you listening, here's maybe a final thought to sit with. Consider that something costing less than a daily cup of tea could provide a payout that might prevent a family from being plunged into crippling debt after a tragedy. What does that specific contrast tell us about the potential for making essential safety nets truly accessible, not just for some, but maybe, just maybe, for everyone? Something to think about. We'll catch you on the next deep dive.